BETZ, BETZ. This is an ETF. It's the Roundhill Sports Betting and iGaming ETF. And this is a brand new ETF that just opened up the past week or so. And it has held a pretty solid value since it's opened up. So this is an interesting one. It's $17 million that poured into this on opening. Let me jump over to an article, the Legal Sports Report. So why are investors betting on bets? Just because sports betting is popular. But this is one of the super hot stocks in Robinhood, and actually, it's a little surprising that the chart is so flat right now. I mean, just kind of like a hypey stock, you'd expect it to kind of pop up and then kind of settle down, but it hasn't really done that. And so this is DraftKings is a big one, and this DraftKings is only 7% of this, but it's the top sports book in this sports betting ETF, and then it's a bunch of companies, Commonwealth companies in U.S. DraftKings, FLUTTER, GAN, PointsBet, KAMBI, BetMakers, William Hill, Penn National Gaming, Kindred Group, GVC, and a bunch of holdings around 5% or so. It's a huge group of sports betting companies, and we're coming into, well, the NFL season, I guess, is going to happen this year. I guess it's less questionable, but it's not 100% that NFL is going to happen this year. But it should be a good year for running backs if it does, because there's, I don't know, maybe 15 running backs this year that could have like a decent starting job. If you're interested in DraftKings and the running backs for the NFL. And they've just rebalanced the last day or so. I guess that's sort of the newer news. But they've had a pretty steady. I was seeing like 10 million a day or something of activity, and they just added Wynn, which is, I guess, probably the least sports betting exposure of all the companies in this ETF. Like Wynn Resorts, which is a casino resort, and they have Caesars and MGM, and they have Penn National Gaming. They have some normal casinos in there too at smaller percentages, like 2 or 3% of the ETF. But this is a huge gambling ETF that's brand new and a pretty steady opening, which is interesting to see. Yeah, so I guess technical analysis on this one, just over the few days it's existed, is maybe a little bearish. We have, tiny. We have sort of topside resistance from the starting area. So where it started here, just kind of horizontal, but there's not really enough data here to take any kind of look at that. This is more just an announcement of this ETF, and it hasn't done anything crazy. So it's very interesting. And casinos, oh man, casinos have been doing absolutely awful so far. And I think, these sports betting companies have a lot of online companies, and they also have a bunch of casinos in this as well. But it has, kind of heavy exposure to different ways of gambling other than traveling to casino areas, because the travel industry is pretty crippled still at the moment. So yeah, so just kind of an announcement on this thing existing now, and not being crazy yet. I don't know. I want to see what this thing does. I'm kind of scared of this thing. I think, oh, who knows what this thing is going to do. But yeah, just the exposure to the industries that are not really doing well, I guess. It's sort of traveling and tourism and gambling has been doing poorly So maybe that's good. Maybe that's good because it could rebound. But for right now, I don't really like exposure to these sectors because we can see more of the same things that have been holding them down over the next year or so. And so I want to see if we run into those kind of problems and if we run into solvency risks. So I'm going to just jump over to the S&P. I'm still waiting on the Fed balance sheet report for today. It hasn't come in. But as I pointed out in the last couple of videos, I've seen 100-something reports about the Fed blowing the balance sheet up, and it's so crazy. But I actually went and looked at the balance sheet. Just over the past week, the balance sheet's almost entirely flat. This is the least money printing the Fed has done since the crash this week. It's almost zero. It's like flat. And I want to see if it's flat or down this week. It could even be down. And everyone thinks the Fed's blowing the market up as usual, and they're not even printing money at all. And the Treasury's issuing tons of bonds right now. The increase in bond issuance has gone nuts. Now they're talking about another trillion infrastructure bill. So yeah, as far as liquidity from the Fed, I've mentioned, this individual bond buying is probably targeting financials, because that's the Fed's job, is to keep the financials operating. And now we're seeing this week, I looked at a Jeff Snyder thing last video, that the domestic U.S. banks are now competing with the international banks for the liquidity that's available. So it looks like there's a little bit of a liquidity squeeze in the domestic banks now. And now the Fed has a way to go in and sort of individually help the individual banks without without doing a huge blast across like a whole ETF or something like that. And yeah, and so the S&P today is, I guess it's pretty boring, but I think we're starting to get some trends here to take a look at. Yeah, it's not really doing anything to note yet. But let's take a look at the dollar first, because this is a big one. And yeah, the dollar is now making a move to the strong side. So it's broken out here. And so I think this could be a bottom. I've been looking at this sort of consolidation reversal area as a spot where the dollar could start becoming stronger. And this was a weird move. So I've been waiting just to see what kind of action we're getting on this. And now we are getting a move to the upside here. So the dollar and the VIX are two huge ones that I've been watching today to try to see what I think is going to happen. And so the VIX is on an upward trajectory, and the dollar is on a steeper upward trajectory, and those are both really bad for the S&P. But the S&P at the same time is consolidating up. And so now we're getting another scenario similar to this one, where the S&P is consolidating up, but the VIX is consolidating. The VIX is going up at the same time the S&P is going up. That's a weird one. And this time now the dollar is breaking up. And the dollar breaking up should be directly affecting the S&P right now, and it's not. It's not yet. The S&P is going up, the dollar's going up, the VIX is going up, all at the same time. It's super weird. And we didn't get a breakout today. So I was looking at this to see if we popped on open, and I was gonna go short the crap out of this thing if we popped on open, but I don't know if we're gonna move up now. Now that the dollar is pushing strong and the VIX is pushing up. What else should we look at? Let's look at put calls. What do the people think? Oh, they're going to. Oh man. Okay. People are going aggressively short right now. Oh, so I don't like shorting when everyone else is shorting. Let's look at the Treasury spreads. Yeah, still a little push to steepen the treasuries, which is fine. It doesn't really forecast a move in the S&P looking at the treasuries. This is just kind of a look at the bond rates. It's a longer term thing. I'm trying to look at exactly what's going on right now. I guess we could look at transportation, which is not doing much. Yeah, it's just kind of flat. I guess VVIX is probably still pretty still. Yeah, Vol is still still. And I want more of a signal. I want more of a signal than this. But I don't like that put spread. Yeah, people are getting really bearish. Oh, I wanted to point out the volume and kind of talk about Europe, I guess, a little bit. I mentioned this in a previous video, and I wanted to see the volume action, and it's low. The volume is low. So, I mean, this here was crazy. This is the highest volume we've seen in a long time. So, I mean, the volume on this entire bull run has been way down here. And the last time we had high volume like that is during the huge crash reversal. Yeah, I mean, you can see how flat the volume has been this whole time. And we're like up here in this volume range, like in this range that we got during the dead cat bounce. We're up in this kind of volume range right now. So this is a significant area that we're in. This is a huge amount of money changing hands. I mean, this volume stick is monstrous. And so we're getting really high volume, a really high, we're getting the VIX and the S&P pushing up at the same time, and the dollar breaking out to the upside. And I guess, yeah, I mean, we're just on the technicals, we're back testing this bull run line here. So I don't expect a breakout to the upside anymore. Like, I thought we might get like a bullish pop continuation back up here. I don't think we're going to make it back. I don't think we're going to make it back up. We have this bull run line that this is the long bull run line, you know, and it looked like we were going to break down here, and then we blasted and did this huge wave up into this bubble reversal, and broke down, and now this rally has just gone up underneath and is just back testing. It's just back testing this bull line. So we already broke down underneath the bull line. We've reversed off the Volmageddon, broken down, back testing this thing, and that's what I think we get. I think this is going to break down. It looks like the Fed has stopped. Man, I want to see the balance sheet. I'm not going to put any shorts in until I see that balance sheet. If the balance sheet is flat or down, I'm going to short the crap out of this thing. And it looks like we're just going to backtest this thing. I don't think it's going to take that long. I want to see it today, and I probably am going to be looking to short today. If I see the balance sheet flat and I see the dollar continue to break out, and I see this VIX continue to increase while the S&P is consolidating up underneath the bull trend line. Yeah, it's underneath backtesting this bull trend line. So I think that's where we get to before this breaks down, and then we'd just be looking at it's just like a 1, 2, 3 kind of thing. So I think this is just probably a 1, 2, 3 wave, and that's all you need. Like, you just need or an ABC. I'm sorry, or like an ABC wave that breaks this, and then we can get up and backtest that. That's what I'm looking at from here, but I want to see this balance sheet before I do that. And the VIX, I think that might be as good as we can get on the VIX. Like, that's made a move down. Yeah, the S&P's going up and the VIX is trending up with it. So I think that we have this trend line on the VIX increasing, and this may be one of the best spots. I think I'm gonna increase my long vol right now. Let me go check some options out and see what that looks like, what the prices look like. But so what I do for long vol, and this is not investment advice, but I don't buy the VIX or the TVIX if I'm looking at a long vol position. And I've done this in several videos, but the VIX and the TVIX, if you're holding a long volatility position in one of these, you're sort of fighting against the structure of the ETF or the ETN. And I mean, you can see here how high the TVIX was, almost 1,000. And this is a huge blast on the VIX, and this thing only made it to 220 something on the TVIX. And it hasn't even gotten past this last peak, this last little tiny peak. So let me show you this, the VIX, TVIX, and this is the VIX. And so you can see the move up on the VIX got past the previous two peaks almost to this one. But it didn't get anywhere near the peak here. It's less, less than halfway. What is it, like 1/4 of the way of getting back up to this peak on the VIX, which was at 85. But here's what I look at for shorting a short. So this is the short VIX, so it's upside down. So this is our peak here. The huge volatility blast went to here. And then you can see the structure of this ETF, where the compounding and the downward pressure over time of the ETF, where you lose percentages in the volatility, it's just kind of flattening this thing out where it barely gained. Whereas the VIX, if we actually flip the VIX upside down, the VIX did something like that at the same time as this thing kind of went flat. So this thing, if you short this long term, you don't lose huge percentages. And so I got a long vol position somewhere in here, and it's moved down, and now it's going to be pretty hard to get back to that level. And it's kind of sitting on, yeah, I like the position where it is right now. And I think this might be as high as we get. I think if this thing breaks down, this is going to be a really good spot to get a vol position. And so the way to go long vol, and also this is the huge peak on the TVIX here. This is the upside down version of it. And this tiny little peak that we just saw in the TVIX, look how close it got. It's like way over halfway. I mean, look at this, from way here to 67 all the way to down here to 23. That's that huge volatility blast that we saw in the TVIX. So I mean, if you drew the TVIX upside down, the TVIX was something like this, and this little blast is like here, and it's nowhere near this peak. But on this SVXY, you have the structure of the ETF fighting against it going up, and now this little tiny move down, look, this is halfway here. Like, it never even made it back to halfway. It's still very close to the peak, and this little blast is close to the peak. So the positions that I have right now are like September or something like that, and I have an out of the money strike at like 20, which is past this peak, like here. And so if this thing goes, it should get past this peak here. And I just have puts. I just bought put options to strike past this peak. And it's aggressive, like long vol kind of strike, like way out. And I'm going to go see the prices of those and probably increase my long vol position right now. And my favorite short, probably the only thing I'm really looking at shorting as far as an ETF, is the IWM. And this is the Russell 2000. I'm a little bit skeptical about the XLFs now with the individual bond purchasing and stuff like that. And the yield curve steepening. It's a little bit too much good stuff for me to want to short the XLF now. But the IWM, people are still net long on the IWM. And I have a Russell. Let's look at the Russell vol. So that's the Oh yeah, here's the Russell volatility. Yeah, so the Russell volatility never even got close to the lows, and it popped way up here. So the Russell volatility is extra high, and the Russell has a whole bunch of extra risk for solvency and all that sort of thing. The Russell companies aren't going to get bailouts. They're not going to get special treatment. They're not going to get easy loans. They're going to have a hard time paying their debt. And there's companies issuing extra shares to try to raise money to pay their debt and things like that. But every time there's share issuance that dilutes the shares, that's downward pressure. So I think that small caps are in a tough spot. And as far as shorting American kind of stuff, that's the short that makes sense to me right now. And gold and silver just hanging out. Not much move on that stuff. The yen hasn't moved, but the dollar has. The dollar has started to break out to the upside. So I don't need to see the balance sheet, I don't think, to mess around with the increased long vol position right here. So I'm going to go do that. I'm going to go check out the long vol prices, and I'll get a video up as soon as the balance sheet stuff comes out, because that's a really important one. You see every single person on earth right now is like, oh, the Fed is never nonstop money printing and going crazy and stuff, and not a single freaking person went and looked at the actual Fed balance sheet. And the Fed balance sheet shows they're not increasing the balance sheet. Like, since the last week, they flattened the thing out completely. They're not doing what everyone thinks they're doing at all. They have the ability and the option to buy individual bonds right now, and they're not buying anything. And you can just go look at the numbers. They're publicly posted. You go to the Fed website, you look at the balance sheet. They're not doing it. So this is not investment advice, and I forget. Oh, I was looking at like a sports betting ETF. Yeah, man, whatever. That thing's so hypey. I'm not gonna be touching that thing. Nope. But it is kind of interesting to be coming out kind of stable. I would expect something like that to kind of, hype up and kind of drop a little bit more. But we'll see what that thing looks like for a while. I don't like investing in new things like that. I don't even know what's going on. And a lot of man, it's so crazy. I mean, like, DraftKings is one of the best holdings or the biggest holdings in that. And the market cap to earnings on DraftKings is crazy bad. Like, their earnings are tiny, tiny compared to their market cap. And then all the other casinos have all their different problems. So that's an interesting ETF, but definitely not something I'm looking at right now. Yeah, I'm just really trying to follow the monetary system and see if we're getting a liquidity crunch that people don't see coming. And I think we are. And that balance sheet is going to tell me a lot. So happy trading, and I'll update you as soon as I get the balance sheet info.